But first off, it's time now for this week's quote of the week. Hey, if you like hearing bright, insightful people, I think Milton Friedman, who's one of the most influential economists of the last 100 years, is an absolute pleasure. All you have to do is go to YouTube, type in his name, Milton Friedman, and you're going to get lots of choices. One of my favorites was a well-known interview he did with Phil Donahue. At the time was sort of the top talk show host, considered a very bright individual, and he was, but it was really interesting to watch Phil throw out these sort of common populist bromides about the economy and how simplistic it is. And then you watch Milton Friedman, in a very understandable, very respectful way, absolutely destroy him. And at one point, Phil just says, he sort of throws up his handkerchiefs and say, "I surrender." Really worth seeing, and it's very entertaining, but there's so many other examples. But I would really recommend, if you like hearing bright, insightful, quick-witted people, go check Milton Friedman out on YouTube. Which brings me to this week's quote of the week. Mr. Friedman famously stated, "A society that puts equality, in the sense of equality of outcome, ahead of freedom will end up with neither equality nor freedom. The use of force to achieve equality will destroy freedom, and the force, introduced for good purposes, will end up in the hands of people who use it to promote their own interests." Well, I appreciate some people refuse to acknowledge that's what history is validating, but it certainly has validated Milton Friedman's observation. I'm very pleased to welcome back to the show Tim Sesnick. Tim is author. He's founder of the Water Street Family offices, but he's got so many letters after his name. It's unbelievable. Tim, I can't even keep up with you, and of course you write in the Globe and Mail and many other places. Tim, thanks for taking time joining us again.
Michael, it's always great to join you this time of year.
Should I just start listing off those letters? So FCPA, FCA, CPA, CEP. My goodness, did you ever leave school?
No, I was a permanent student until my parents forced me to leave the house, and then I had to get a real job.
Well, I know this is such a busy time of year for you, and I do appreciate you finding time, but I just thought, just even in quick snippets, we just start giving people lists of things to keep them, just sort of a mental checklist. And of course, as you're always telling us, tax planning should take place starting probably Tuesday, if you know what I mean. Monday is our deadline. Start it for the next year. But still, even going over some of the things we should recall for this year will get us set up for the next year. So let's start. I want to start with employees for a second. I'll get to investors in a minute, but let's start with employees. And one of the things that I find people are always a little bit confusion surrounding is, when and who can deduct their vehicle expenses.
Yeah, that's a good question. If you are an employee and you're using your car for work purposes and it's your own car, you can claim some deductions potentially. So here's the way it works. If your employer gives you an allowance to cover your costs of your operating your car, and if that allowance is based on kilometers driven, then the CRA, the tax man, looks at that and says, okay, that's probably a reasonable allowance, and if that's the case, we're going to call that allowance tax-free, and then you won't be able to claim a deduction for anything. But if you can argue that your allowance you received or the payment you got from your employer were not sufficient to cover all your expenses, then you can actually add that allowance to your income and claim actual deductions for your car. That's usually the most common way to claim that's the best approach in most cases. So you're going to be adding your allowance from your employer to your income, and then deducting costs of your car, and that's a portion of everything, Michael. That's a portion of gas, repairs and maintenance, your car washes, your insurance, even interest on your car loan.
Okay, I'm just going to keep firing them at you here, Tim.
Sure.
What about the eligible educator school supply tax credit? You got to tell me a little bit more about that.
Yeah, this is news, relatively new. So teachers who are paying for some of their own supplies for the classroom, and if they're not getting reimbursed for those supplies, those become eligible for a tax credit now called the teachers supplies, educator supplies tax credit, and you can claim up to $1,000 of those costs. So, but it's only if you were not reimbursed. And by the way, here's a little trick that teachers might want to play. If you are working for a private school, and if that private school is a registered charity, you actually might be better off making a donation to the school and then having the school buy the supplies, because there's no $1,000 limit. Then you can increase the limit beyond $1,000. But again, if your school's not of that nature and you can't donate to your school, then you can at least claim a deduction for some of those costs you're incurring.
That's a great idea. Hey, let me just ask about this. Employees can deduct expenses, right? And what about, though, if you pay GST? And this is something that I think people would forget. They sort of claim those expenses, like, I don't know, I bought a desk, I bought a computer, whatever it is, stuff that you need to do your employment. But they forget to do anything that you pay GST on that stuff, and PST if you're living out in British Columbia, for example.
Yeah, that's right. So if you're claiming employment expenses, and to do that, you got to file Form T777. So if you're filing that form and you're claiming some expenses related to your employment, which can include the vehicle expenses we just talked about, it might include some other costs you're paying for as well. And if you're paying those costs, then you can claim an HST or a GST, in the case of BC, rebate. You file GST. It's a form called GST 370. File it with your tax return, and you'll get back all the GST you paid on those employment expenses we're talking about.
I will bet you, Tim, big time people forget that one.
Yeah, they do.
There's a lot of, it might be real estate commission salesmen anywhere, by the way, but, and a lot of those, I would bet you they forget that, and it can add up.
And sort of related to that, if once somebody is 19 years old, so you've got a young person in your home, and they're now 19, they're eligible to claim a GST or HST tax credit, which gives them back probably up to $300 annually, just in cash back, even if they didn't earn any income. So make sure those kids file tax returns, because not only will it create RSP contribution room if they did earn some income, but it'll also get back this GST credit I'm talking about.
You just mentioned credit, which reminds me, I wanted to ask you about, do you have the option, because I know you do with charitable, don't you? Charitable donations, my spouse and I can pool them and put them on one return, even though she did some and I did some.
That's right. That's good, and that's just good, very simple and effective strategy. It's not going to make you really rich, but it's going to give you an extra $50 probably in your pocket or more. So the way that works is that you only get a certain amount of tax relief on your donations, and once the donations are over $200 in total in aggregate, then you get more tax relief. So by pooling them all on one spouse's tax return, you get to that $200 threshold faster. And you get more tax relief for doing that. So that makes good sense. And similarly, when it comes to medical expenses, what you want to do is you want to claim them all on the tax return of the lower income spouse, because medical expenses are income tested, so that the higher your income, the less able you are to claim medical expenses. So by claiming it on the lower income return, you'll get more tax relief, and you can just pool your medical expenses like that as well.
You're getting everybody. I hope you're getting the idea why I adore having Tim on here, and there's nobody who I've benefited more from reading their books, and there's so many, like 101 Tax Secrets for Canadians, and I love the Winning the Tax Game. Really got me started, a few years ago. And of course, you can do that. You can win the estate planning game. But all of those books are available, and I just think that having a fundamental understanding of taxation is just so important, given that over half our income ends up in some form of taxation for the average Canadian here. Sorry, go ahead.
I was going to say, Michael, related to that, not everyone's going to be interested in studying how to minimize tax, but as long as one person in the family cares about that, then you can learn from that person. But it really benefits that one person take that initiative.
I'm talking with Tim Sesnick. You can also find him writing in the Globe and Mail, but I'm glad you're listening to him here on this show. I'm going to take a break, but I'm going to come back. I'll tell you, I'm going to ask him about investors. Plus, I'm going to ask him about that sale of the primary residence and some details around that. We've been chatting a bit with Ozzie Jurek about that, and I want to get Tim's take on it. So all of that coming your way. We're going to try and save you more money off your tax. Make sure you've taken all the legal deductions you can right here across the Money Talks Network. You're listening to Money Talks. My name is Mike Campbell. I'm really pleased to have Tim Sesnick on with me. This is a tax expert extraordinaire. You can find him in the Globe and Mail. And by the way, I would really recommend any of his tax books, because getting this understanding is really key. Hey, Tim, just before the break, we touched on tax credits that I could transfer to another family member. And I just want to make sure I got that list out. We talked about medical. We talked about charitable. What other things can I sort of move to the higher paying family member?
Yeah, there are a couple of other ones. For example, the pension credit. So if you're receiving a pension from an employer, in fact, you can do even more than just transfer. You can transfer pension income from one spouse to the other, we're talking about employer or employment pension, not CPP. And so you might as well report some pension income on your return, some on your spouse's. You can both claim the pension credit that way, and that'll save you tax. You can also transfer tuition and education and textbooks tax credits to your spouse. You can transfer the age amount. So if you're over 65 and you don't need the tax credit to reduce your taxes to zero, you can give it to your spouse. And there's also a disability tax credit, which is also transferable in the same kind of way. So and the last thing, one more thing you can transfer, by the way, is dividend income. If you're receiving dividend income on Canadian securities, so Canadian stocks, you can choose to transfer all of your Canadian dividend income to your spouse, not less than all of it, but all of it. And that makes good sense. And you can do that if it increases your spouse's spousal credit, and that can also save tax.
I just want to get one more on the student. Like if a student doesn't have that kind of obviously most students are in low income brackets here. What can a student do? Can they transfer, like you get that tuition credit and stuff?
Yeah, so a student can either hold on to that credit for a future year and claim it in a future year. That's one thing they could do. I find that most students do not end up doing that, though, because you can also transfer it to a parent or a grandparent or spouse. Up to $5,000 anyway of your tuition credits can be transferred over. And usually we do that because you get the tax relief right away as opposed to saving it for some future year. And by the way, this is the last year for the education and the textbooks tax credits. They're disappearing. The tuition credit will stay around after 2016, but the other two will be gone after this year.
Okay, and now let's go to investors just for a second here and talk about the kinds of things that investors should be aware of.
Right. So first thing to keep in mind, you may be able to claim a deduction for some interest costs. So take a look at your brokerage statements, and if you have any interest expense or costs on there, either because you had a margin account, don't forget to look at those statements and claim that interest as a deduction. People often forget to do that. I think also when it comes to investors, you may be entitled, if you lent money to your brother or a friend or somebody for business purposes, and you're not likely to get that money back. And that's happened to too many of us, I think. But if that happens, you may be able to claim tax relief for that, and we call that an allowable business investment loss. And it's kind of like a capital loss, except it's better in the sense that you can offset half of that loss against any kind of income, not just against capital gains. So that's something else to keep in mind. And similar to that, if you are an owner in a small business and your business has grown in value over the course of the last few years, you might be entitled to the capital gains exemption, lifetime capital gains exemption, which will shelter the first $815,000 last year in capital gains. And there are steps you can take today to use up that exemption now.
Hey, by the way, if you used up the $500,000 capital gains exemption before it became more, like you say, 800, do you get that extra 300? Do you know what I mean?
Yeah, you do, and that's a good point, Michael, because a lot of people claimed the exemption in the past, and they think, well, I'm done with my exemption now. I can't claim anymore. But actually, the dollar amount of the exemption keeps going up every year. And in fact, it's already at $1 million for fishing and farming property, so it won't be much longer before we find small business exemptions at that level too. So you may be able to claim an additional exemption that you still have available.
Okay. And let me move to our, one other thing I want to quickly say. Let's say I've got, you mentioned Canadian dividends that I can share, but let's talk about U.S. dividends or U.S. property, et cetera. How do I determine what exchange rate when I bring it back, or what's the best way of doing that?
Yeah, that's a good question. So CRA expects you to report your worldwide income on your tax return, so even if it's in a different currency. And so most commonly we find people with a lot of U.S. dollar income. You can convert your gains or your profits or your income that may be in U.S. dollars into Canadian, and you can choose the exchange rate you want to use. You can actually use the average for the year, which is what the CRA normally sees people doing, or you can actually choose the exchange rate on the date of the actual transaction or when you receive the income. And what you want to do is do the math both ways and figure out which is best for you, which results in the lower amount of income being reported on your tax return.
Okay, and I'm going to switch gears now because it's sort of a related thing in this way. We've been talking a little bit about that change last year that if I sold my personal or my primary personal residence, I still had to report it. Can you give us a little bit more on that?
Yeah, it used to be that when you sold your home, if you sold your principal residence, most people know that when you sell it, it's generally tax-free. And so if you sell it and it is tax-free, then we've never had to report anything on our tax returns related to that sale. That's all changed now. So starting with 2016, if you happen to sell your residence, your principal residence, you now have to report that on Schedule 3 of your tax return. And the reason the government is doing that is because they want to track this more closely, because what they're finding is that there's some people who should not be claiming the principal residence exemption who are claiming it anyway. Some of these people are foreigners and aren't even filing Canadian tax returns. So they're going to catch people this way now. The other kind of individual this is going to affect, though, Michael, are people who buy properties, fix them up, and then flip them. So a lot of people who do this will live in it for, a month or two, or maybe not live in it at all, and they'll call it their principal residence when they sell it, and it'll be tax-free. But they've never had to report it on their tax returns because, again, they claimed it as a residence. Well, now you've got to report your principal residence sales. So the government, if you own a property for a very short period of time, a year or two, that will raise a red flag on your tax return now. So what may happen is the government may come back and say, okay, should that really be taxed as a capital gain, or should it be taxed as regular business income, because it's more like business inventory, buying these homes and flipping them. So that's just something to be aware of if you're into that kind of investment.
We have about a minute left here. What about people who have been claiming a home office space, like 8% of their house was a home office? Is that changing, or are they just going to, is that going to be subject to capital gains and that portion of your primary residence?
No. The good news is that if you use your home, either rent part of it out or to use part of it for a business, that's not going to affect your principal residence exemption, as long as the office in your home or the rental part of your home is what they say is ancillary to the use of the property as a residence. So, in other words, the property is still mainly used as a residence, just part of it is used for home or for business. Then you're okay. Once you get over about half of the home, 50% used for business or for rental, that's when you get into a situation where you may jeopardize part of your principal residence exemption.
Well, Tim, look, there's so much here, and that's why we love to get a chance to visit with you throughout the year, but I really appreciate it this time of year, especially when you've been busy and you make time for us. Thanks so much.
No problem. Anytime, Michael.
Great stuff. Tim Cesnik, as I say, I really encourage you to go out and buy his books. You can just get them on Amazon. It just gives you that background, because I don't know how you manage your personal finances, at least having some understanding of the tax laws that are out there. He's also the founder of the Water Street Family Offices. Look, I'll take a break. I'm going to come back. Speaking of taxes, I'm always on the alert for how governments are still collecting more money. It doesn't always have to have the name tax beside it. Well, I'll share that story with you in the Shocking Stat, plus Ozzie Jurek, Drew Zimmerman, all of that. And I got about 19 goofies for you. Stay with us on the Money Talks Network. We've got some great stuff on the MoneyTalks.net website. And by the way, have you seen, Larry Page is one of the co-founders of Google, and he has invested money in two different areas of flying vehicles. Well, we've got on, if you haven't seen it, they released a video this week on one of these types of flying vehicles. It looks so much fun. My goodness, when can I buy one? But it's right there on Money Talks, so make sure you go up there and have a look at it, moneytalks.net. Also, some other great things. We've got something on artificial intelligence, how it confounds its creators. The Donald at Bat, another big article that was very popular. Canada's six city housing prices and the plunge-o-meter. All of that. You can get the daily business comments, and you can re-listen to Tim Cesnik, for example. Some of that tax information became fast and furious. All of that you can go to moneytalks.net and get. But hey, have a look at that thing, that flying vehicle. I can hardly wait till I can get a hold of that one. Let's talk shocking stats. I'm regularly monitoring the increase in taxes, but they don't always call them taxes or fees or levies. And that's the context of this week's shocking stat. By the way, brought to my attention thanks to my friend Marty Armstrong. It's a reminder, by the way, that governments can get into your pockets in a whole lot of ways. And here I'm talking about speeding tickets. Think about this. If you're 1 kilometer over the speed limit in Switzerland, the traffic camera records it, and you're automatically fined. There's no margin for error, and it's assumed those cameras, of course, are perfect if they're measuring at 1 mile per hour or 1 kilometer per hour over the speed limit. Now, the Swiss record fine is probably the millionaire who was caught speeding. He went 85 miles per hour in a 50 mile per hour zone. It was a second offense. Do you want to guess how much his speeding ticket cost him? Well, the court did it based on his net worth. And they said his net worth was $22.7 million, equivalent of $1 million. And the court fined him the equivalent of $290,000. Hey, Britain's no different. It joins other European countries in setting speeding fines according to your wages. You get fined 175% of your weekly wages. So, for example, let's say you make the equivalent of $200,000. You'll be fined $6,370 for speeding. Maybe you heard about that famous case in Finland where they had one driver who was caught doing a measly 15 miles per hour over a 50 mile per hour zone, but he made $7 million a year. Do you know what a speeding ticket costs? $60,000. But the record is probably still in Sweden. In 2010, a driver got caught doing 186 miles per hour. You know what the fine was? 650,000 euro, about $1 million for speeding. Oh, I love that desperation for government revenue, and speeding's not a bad way of getting it. I'll take a break. I'll come back. Lots to talk with Ozzie Jurek about this week. A rundown on which markets are hot and which ones are not when you're talking about what's going on in Canada's real estate market. Plus some other changes. If you're living out in that Vancouver area, there is more building code changes, and these are going to cost you money. One of the most unreported sides of that big affordable housing debate is how much civic municipal levies add to the cost of a building. In fact, we got a new report also this week by the Fraser Institute outlawing how long it takes to get your building permit and how much money it adds on, all of that and every other charge that the city lays on, to the cost of a house. You know, we talk a lot about affordable housing, and this is one area that never gets looked at. Well, we'll do it when we come back. Ozzie Jurek is getting sent on assignment in Europe. I'm sending him to Europe next week, but I'm sure that assignment will include some beard and lederhosen, but what the heck. I'm sending him on assignment. He's going to be reporting to us from various places throughout Europe, but before he goes, I want a quick take on the Canadian market. Ozzie, let's start with, look, we're going to get some new numbers out of Vancouver, Victoria, etc. So there looks like there's still some heat in that broadest region when you drop a coin down there. Vancouver recovering, Victoria hot.
Yeah, no question about it. The final numbers for the month are not out till next week, but CMHC just did a study. They call it a housing market assessment, and they call the market problematic. And so that actually means to them that it's Victoria's problematic and has overvaluation, as does Vancouver. But conditions have improved in Regina, Montreal, and Quebec City. And so, in other words, so when you look at Regina, Montreal, and Quebec City, there is really nothing going on in comparison to Vancouver. They actually could call them a deadbeat city for investors because they're all piling into Vancouver, Toronto, Victoria, and Hamilton. So, but the market is clearly much stronger from the Sunshine Coast. Kelowna is burning up, and we talked about that possibility last fall about Kelowna. And so CMHC says the problematic cities are Victoria, Vancouver, Hamilton, Toronto. The weakest are Ottawa, Moncton, Halifax, and St. John's. So really, it's a tale of two markets.
Yeah, it just shows you that one-size-fits-all sort of policy is very difficult there. I love that, by the way, that they say, improved actually means prices are dropping, or settling down. Yeah. I mean, it's kind of opposite to, we keep on forgetting that if you're a homeowner, you're happy to see prices go up, for goodness sakes. It's only when you're trying to get in the market, and that's what I want to mention at this point, is one of the Fraser Institute came out with a very good study this past week. It's something you and I have talked about relentlessly because it just keeps on getting missed in the conversation. I'm seeing it right now in British Columbia. There's a provincial election. Everybody trying to make brownie points on saying, why didn't you wave a magic wand and change the affordable housing? Well, we don't look at what government's doing to make it unaffordable. For example, Vancouver was the worst, according to the Fraser Institute, adding $78,000 in all of their charges and levies, and their permit process was the longest. It takes 21 months to get your building permit, and we still say we care about the economy. I don't think so. But they got a new one coming on. They're not done yet in adding to the cost of investment or real estate costs.
Well, this is, of course, under the banner of the lead, the flexibility of strategies and how to do water and all of this kind of stuff. Well, Vancouver has now come with banning natural gas on all new homes in Vancouver. That is banning it. So if you're used to cooking with natural gas and have water heaters and a fireplace that works with natural gas, as of May 1, in any new or reconstruction, you're not allowed to use it. And so that, first of all, it means a higher utility bill because natural gas is about a third of the price of electricity. And under the umbrella of course, being environmental, more efficient, now concrete balconies will likely require a thermal break. All condos and rental units will need mechanical ventilation. I mean, all that just say costs more money.
Yeah, as you say, it's what kills me is that there's a lot of people in the environmental movement who would tell you a switch to natural gas is a good thing because of lower emissions. That's one of the reasons that the States has actually reduced emissions when you look at the cost of industrial production. But it's been reduced. But here they're banning natural gas in Vancouver.
Yeah, the goal is to go to 50 to 70% down in terms of greenhouse gas emissions and to zero emissions by 2030. And that's all in the area. It's all worthwhile, but in the meantime, things cost more. And in the interior, their building after building is stranded because they build heat and facial heat pumps or swimming pools and so on. And the common area costs have just skyrocketed. It isn't working.
Have you had a chance to talk to any developers about what this will add to the cost? I know it will for consumers, as you say, because natural gas is about a third the price of electricity, so consumers are going to pay more. But have you had any chance, have we had feedback yet, or are they going to have to see this thing in motion for a bit?
Yeah, they have to see and study it because it says certainly that it likely requires a thermal break that could be costly or mechanical ventilation before it's just air pressure in the hallways. Like you cook Italian food and I cook German food. We don't want to smell each other. Never the twain shall meet, so we put air pressure in the hallways. But now it needs mechanical. All costs money, not just to build, but also to operate. And the crazy thing is when you say, what will it do for global warming? Well, British Columbia contributes 0.18% of global emissions. And so these additions or these reductions would be an infinitesimal percentage, 0.00001. But who are we to fight City Hall, eh?
There you go. Hey, and let me just finish off that portion again, just to remind people in Vancouver, all the complaints about affordable housing, well, $78,000 worth of the cost is the cost and the fees for the lower mainland in regulatory costs, the dollars per dwelling unit. Surrey was $52,000, Richmond was over $41,000, Langley about $37,000. So have a look at that, and then you get the big delay in trying to build anything, which is incredible. As I say, 21 months in the city of Vancouver to get your building permit. I mean, this is something that we've got to have more focus on, is the bottom line. Hey, Ozzie, what about a couple of cheerful hot properties for me to finish?
Well, I had one very nice deal lined up for you in Surrey, two-bedroom condo at $179, but I just got a note that there's an offer on it, so might still be around. You can certainly check it. Then we have a Quesnel condo, 2 bedrooms, right down by the downtown hospital, solid building, underground parking, $84,900.
Interesting stuff. And, Ozzie, I want you to wish you the best. I mean, you're going to Russia, Estonia, Sweden, Finland. We've already sent a warning to Denmark. Wittenberg, Dresden, Prague, Berlin. It's going to be an incredible trip. On assignment, he'll be reporting for us. I'm going to give him next week off because apparently he has to takes him about 2 weeks to get through immigration in Europe. But we're going to give him next week's off. But then he's going to be reporting live from Europe, various places, tell me the feel of Europe and what. I've got actually a lot of questions about Europe, but also on the real estate side. Ozzie, go out and have a fabulous trip.
I sure will. I look forward to it. And anybody that thinks that my house is empty while I'm gone, it isn't. I have some friends moving in.
Okay, I'll make sure they know that. Yeah, and that's besides the 6 Doberman pincers. Okay, Ozzie, have a great trip.
Take care. Thanks, Mike.
We're going live to the Trading Desk with Drew Zimmerman. Plus, I have a plethora of Goofy Awards. It was quite the week. I had to harvest. I think I settled on 3 of them, so stay tuned for that on the Money Talks Network. Well, I got some Goofy Awards planned for you, so you got to stay tuned for that. But right now, I got to go live to the Trading Desk. Drew Zimmerman joins me, Investment Commodities Future Advisor at PI Financial. Drew, let me just come back. I chat with Michael Levy at the beginning of the show about the Canadian dollar, and I was thinking of you because last time you were on, you were saying, I am definitely short the Canadian dollar, I'm playing oil also to go down. So I want to come to the Canadian first and just get your take on what's been going on there.
Yeah, Mike, well, we had a second down week in a row. That brought us down to lows that we haven't seen in the last 14 months. So it's going to be back to the beginning of 2016. But a bigger shocking stat on that would be that we've only had 2 other monthly closes lower than this in the last 13 years. That's just showing you how low the Canadian dollar is right now.
Wow. Now, it begs the question, though. I mean, you got her down to 73 cents or so. Have you covered your short, or you still think there's more downside to come?
We haven't covered our shorts, Mike. We still have what we're calling a laundry list of things that are working against the Canadian dollar. We've got U.S. short-term interest rates, the premium that they are over the Canadian ones. We've got lower crude prices being a huge risk in our mind. We still think that crude oil prices could break below 47. If that were to happen, we easily see Canada going towards 70 cents. We also have Canadian debt levels at record highs, and we think they're way too levered to the real estate market. We have the trade uncertainties with Trump. He's talking about canceling NAFTA, then he's not canceling NAFTA, but he's going to renegotiate it anyway. And all of this has been happening, Mike, while the U.S. dollar has been weakening for the last 3 weeks. We think the U.S. dollar could actually strengthen. We've got another Fed meeting coming up this week, but if they're going to raise rates again in June, which the market is giving a 70% probability of, we think that U.S. dollar could strengthen, and if we see that U.S. dollar strengthen, that's just going to be further pressure on the Canadian dollar. Yeah, that last point you're making is I'm looking at the Canadian dollar getting weak during a same period that the U.S. dollar is weak. I mean, up to now, it's sort of been a thing where so much money's coming out of Europe into the U.S. or maybe from Asia, but we had, some good euro strength, and, I guess the French election wasn't as bad as people imagined. The first result, we got the other one, the runoff coming up May 7th, but that's what sort of blew me away. It wasn't that, a lot of times you just look and say, well, the U.S. dollar was strong against everybody. Well, it wasn't this time, and the Canadian was still weak against the U.S. dollar. Exactly, and if it's weak while the U.S. dollar is weakening, again, we just come back to if we do see that U.S. dollar strength, that's just going to be all that much harder for Canada to do any better from these levels, which is why we think that now that it's broken down to these 14-month lows, we're looking towards the lows of 2006. We think 68 would be an extreme case, but again, it's going to be a little contingent on crude prices in our minds, but the 70-cent level is very much in play. And for the last few months, we've been very adamant on saying that that was the risk in the Canadian dollar. And as you mentioned earlier, our positioning has been for that. We've been short the Canadian dollar. We've been short of crude oil. Our managed account at polarfuturesgroup.com has had our best month. We were up over 3% this month with that positioning. Well, great stuff, Drew. As I say, I knew you'd be having a smile on your face this weekend after I saw that close Friday. Thanks for finding time for us. Thanks for having me on, Mike. Drew Zimmerman, PI Financial. My thanks to Drew. My thanks to all our guests. And a reminder that Money Talks is brought to you by Solera Club. Solera Club is a royalty-based style investment. That means you get paid first. You're first in line for payments. There's no fees attached to it, and it's in the the technology side of things. So for more information, go to soleraclub.com. Well, it's time for this week's Goofy, but so many Goofy, so little time. I'm going to start with the Prime Minister, who, with his penchant for the WTF statement, from Fidel Castro, who was a beloved leader by Cubans, despite the fact that an estimated 98,000 died trying to flee his regime, to this week's beauty, an admission that his brother was charged for possession of marijuana, but his father, former Prime Minister, in Justin Trudeau's own words, used his connections and resources to make the charges disappear. Well, that's a level playing field. And an insight into the elitist world our current Prime Minister grew up in. But how he didn't see the controversial nature of that statement's beyond me. Up next, the standard bearer for so many Canadians, the United Nations. They love to cite the United Nations as some sort of authority for all kinds of actions. You must have UN approval before you take action.
Well, I'm going to leave aside that this is an organization dominated by dictators, despots, and kleptocrats, and instead focus on the latest fiasco, which has Saudi Arabia elected to the UN's Women's Rights Council. Really? As UN Watch, a human rights organization monitoring the performance of the United Nations, stated, in citing Saudi Arabia's atrocious record on women's rights, and quotes, electing Saudi Arabia to protect women's rights is like making an arsonist into the town fire chief. Absolutely. Nothing new for the UN. Remember last September? They appointed Iran to the Commission on the Status of Women. That was the same month the UN human rights official petitioned Iran to halt the planned execution of a woman who was sentenced for murdering or killing an Iranian intelligence officer who raped her. By the way, in case you're not aware, Saudi Arabian women are not allowed to drive cars. Each woman must have a male guardian who controls all important decisions, and all of those decisions are important. Best part of the Saudi Arabia's election was at least 5 European Union countries voted for them. And finally, very quickly, late entry, Canada's Minister of Defense, who this week claimed he was the architect of Operation Medusa in Afghanistan. Not true. I don't know why politicians do something like that. It's beyond me. But, of course, his claim brought a quick response from numerous members of the military, outraged at the false claim. Heck, why didn't he claim being architect of D-Day or Hannibal's crossing of the Alps to defeat Rome? Got to get a good one in there. Anyways, a great week for Goofies, but you go out and have a great weekend. My thanks for listening.